Okay, Mr. Nemeth, can you hear me?
Hello, good evening, everyone. Can you hear me?
Hey, Joseph, we hear you loud and clear. I'm going to go ahead and turn the screen over to you at this time. And with that said, you can just take it away and we'll roll from there. Go ahead and just accept that, and we're in good shape.
You should be able to see my screen now.
We can see your screen now. And Joseph, real quickly before you going, I do want to make sure that everyone knows you can write questions as Mr. Nemeth is going through the process here. And we will take breaks periodically about every 15 minutes, and we'll go ahead and answer and address any questions, and certainly address questions at the end. Okay, Joseph, take it away.
All right, so what you are looking at is one of my personal screens. In the middle, this square, this is our software, basically the main window or the dashboard, as some of you have learned to refer to it. And what we're going to do, as we've done the last couple of times, we're going to show folks tonight how the software works. But the way we're going to show it, we're going to speed the time. In other words, we're going to show the software open trades, manage trades, close trades in a time lapse over a period of maybe 1, 2, maybe 3 months, depending on how much time we have and how fast we go, depending on how many questions we need to answer in between. And I'm going to also focus on explaining what open deals mean, what closed deals mean, what a drawdown is, what the profit is, how the profit is generated, and so on. So, without spending any more time jibber-jabbering here, let's just jump right into it. What you're looking at is the main window, and we navigate all of our modules from the main window. Now, the only difference between this particular software and the one that everybody else has is this one button down here called the simulator. And the simulator will allow me to feed data through the software very, very quickly, so that people can appreciate how the software does it. In other words, the mechanics of the software, the behind the curtain, if you will, behind the scenes. So first thing, I'm going to move it off to the side here so that I can make the rest of my screen free or open, available here. What you see here, don't pay any attention to this. These are just my my personal icons. Don't worry about that. So first thing, as you well know, Harvester is the engine of the software, and this is where the strategies are set up. And I have chosen to run the hybrid strategy that has been working extremely well over the last couple of months for all the folks that have requested it. And I don't think we even have a single person who's in a loss at this point. Or even in a major drawdown. Everything's being just handled really beautifully. So I'll explain a little bit about how we make strategies. This particular strategy is created around pound yen. We chose pound yen because pound yen is normally a very volatile pair. We need volatility or movement in the market in order to make money. So we chose pound yen because normally it will move anywhere from 150, 180, sometimes 200 pips a day. Hasn't really been in the last few months, but when it regains its normal behavior, that's exactly what will be happening. Right now, it's probably under 100 pips, but that is not what we're going to be discussing. We're going to be discussing how we set this up and how the software trades. By running these automatic or automated mathematical algorithms that we call harvesters. Now, as you can tell right here at the bottom part of the harvester window, the open space is populated with 20 different lines. Each one of them has an ID number, and this is what we call a harvester 1, harvester 2, and all the way to harvester 20. Meaning that this strategy is composed of 20 different algorithms. They are both set up to trade pound yen. Half of them are to buy pound yen. The other half is to sell pound yen. So in other words, 10 harvesters or 10 algorithms will be managing long trades, and 10 algorithms will be managing short trades. These algorithms each has a specific settings that I am not going to go into on this webinar because we'd be here all night. But suffice it to say that all of them work together as one team, kind of like a football team. When the other team has 11 players on the field, you don't send out one player, you send out 11 players so that they work together as a team. That's exactly what is happening over here. 10 harvesters are opening trades to the upside, 10 harvesters to the downside, and they all work together in unison. And the goal is to reach your profit target, which we set up in a different screen. But let's just assume that we have set up these harvesters, and when I press start, they will all start running. Also, the harvesters are managed in this window over here called the advanced management window, and these are various types of events that take place throughout the trading day, and depending on what events are taking place, those events are calling in actions, and the actions start or stop harvesters, close trades with profits, etc., etc. So whatever needs to happen. This particular harvester has 31 different events that cause 31 different actions. Now, one other thing I will point out, that the way we're going to trade is going to be based on purely price action. In other words, we're not going to be paying attention to any technical indicators, no macroeconomic data, no CNBC, no what the experts tell us or what our brother-in-law tells us. None of that really matters. The software will trade on the basis of just price movement, relative price change in the market. When the market moves certain direction in a certain number of pips in one direction or the other direction, the software will know, and it will trade based on the parameters that we have set up. Now, by the way, we have a library of these setups or these strategies. So all you have to do, those of you listening, is basically request a particular strategy, and we will send you the software with it, or we will just upload it into the harvester window for you. It takes about 30 seconds or so. So, having said that, before we start trading, we will also open our closed deals window, and that's this blank window here. What we will see in this window will be only the trades that have closed. Some will have slight profits, some might have bigger profits, some might have slight losses, but I will be making comments as this window is being populated with the trades that close. When we will be looking for a function called closed all deals. Closed all deals, particularly the global function, one that closes all the trades. When we say global, we're referring to all the trades within one account. And when the global close kicks in, then the balance of the account goes up. Every time global close all deals kicks in, new trades are closed. More trades are closed with profit, and the balance grows. Now, the other thing that we will open is the open deals window. And the open deals window will show us all the trades that are open. These are not close to. This is like your inventory. Let's just say that you're a car dealer, and you have a car dealership, and all the cars on your showroom floor are basically, that's your inventory. Haven't been sold yet. They're just kind of, waiting for the right buyer. Similarly, these open trades are waiting for the right condition in the market to be closed. Then they will move from the open deals down here to the closed deals, and we will see how that happens. What I'll do, I'll change this one setting here. I'll change this setting. What I'm actually setting, I'm preparing the open deals window. This is where the where the open trades are going to be shown and managed within this window. I'm setting it up because I will be trading a $10,000 account. I'm setting a profit target for 100 pips, or give or take roughly 1% of the balance. Right here, available equity, I have $10,000. So I set up my strategy to basically take 1% out of the market at a time. Every time the global close deal kicks in, I will be making 1%. So with that in mind, what we can do, we've got the data queued up. We will run the data, and we will start the harvester. I already talked about the harvester. The harvester is right here on my other screen. I'll bring it back real quick, and then we'll shove it over to my other screen. I have two screens actually, but you can only see one screen, so I have to kind of squeeze everything onto one screen. The screens that we will not be using, I will just move them away so that we can focus on what it is we really want to talk about. So we're gonna run the data, and we will start the harvester. I will press the start button. So we'll run the data. There it is. Data's running. And there we go. So now you see that the harvesters are basically running based on based on the events that we talked about in the advanced management window. Based on those events, the harvester will start trading, placing trades, closing trades, etc. We're going to be focusing on targeting 100 pips each and every time global close all deals kicks in. So I'll put that aside. Now I will ask you to pay a little attention to this module right here. It is called the simulator. You see actually 4 different lines within this gray area of the simulator. Unfortunately, I can't enlarge it. Hopefully you can see where I'm pointing with my mouse. This bottom line down here that I'm tracing with my mouse is actually the movement of the market. When the market goes up, you will see the line going up. When it goes sideways, it will be kind of flat, as you see over here. When it goes down, it will be going down. These 3 lines above here, the red one, green one, and the blue one again, those are equity curves. Basically, based on how our trading is going, the equity will either be going up or down, whether we're making money or losing money. I would like to think that we're going to be mostly making money. So you will see mostly the green line and the blue line going up. The red line actually represents all the trades that are open. Those are the trades in the open deals window right in here. The I'll switch it back to our Forex dat view. But the green line, these will be trades that are closed. In other words, trades that will be actually moved from the open deals window to the closed deals window, and this will be pretty much money in the bank. The blue line is a combination of the red line and the green line combined. So that one will be probably somewhere in the middle, and eventually when close all deals kicks in, the blue line will catch up to the green line, because at that point there will be no more open deals until new open deals until new trades get open. So let's just run a little bit. We basically started trading right here. This is the current timeline. Started trading on the 1st of January, actually 2nd of January 2013, and we're about 2 hours or so into our trading, and we already have some trades open based on this movement in the market. So let's just keep going here. As you can see, the minutes are going very, very fast, a lot faster than normally. Because we're doing the time lapse thing, as I mentioned earlier. So what we already see here, these are our initial global closes. We've got 107 pips so far, and that is the summary of all these trades. As you can see, there are some negative trades, minus 123 pips here, 104 pips here, 60 pips here. But when you add them all up, when you add up all of these 14 trades that we've placed and closed, the aggregate profit is 107 pips. And basically, it doesn't matter to us whether it takes us 10 trades, 1 trade, 50 trades to make our target. We're basically going after 100 pips each and every time. So this is again the blue line over here, which is a combination of the red line and the green line. The green line represents all the trades that have been already closed. The blue line is a combination of the open deals and the closed deals, and that, like I said, it will most of the time will be in the middle. As we can tell, the market is fairly flat at this particular time, so there's not a whole lot of activity. We need movement in the market. There's a lot of open trades. Actually, not a lot. I mean, we've got 10, which is really nothing. And we are currently about 64 pips in a drawdown, meaning that if we wanted to close all these trades, which we're not going to, but if we did, we would suffer right now about an 82 pip loss. What I'm going to do, I'm going to speed this up a little bit so that you can see the trades happen a little faster. The market's going to be moving a lot faster, as you can tell. Actually, you can see the status of our open trades. We're about 92 pips down right now. These are still our closed trades. And so here we go. Bobby, if there's any questions so far, I'd be happy to answer those.
Actually, Joseph, at this time, most of the questions that are coming through, they're marketing questions and things that really don't require your assistance. I'm just typing and answering them as we move forward. So why don't you just go ahead and finish, and as something comes in, if something additional comes in, I'll break you. I'll jump in and let you know.
All right, great, thanks. All right, so here we are. We keep trading, and here we go. Another global close all deals. And we're a total of 249.9 pips in the black, or in the good. These are profits, and the software doesn't stop trading. Basically, it monitors the market 24 hours a day, 5 days a week, for every single minute that the market is open. And it basically reacts to the movement in the market. If the market is moving, it will trade. If the market is not moving, it will do what it is programmed to do, and it will keep repeating it over and over and over and over again until you say stop. And you say stop right in here. I could stop all the harvesters right now, but I'm not going to because I want to trade, and that's exactly what I'm doing. So right here, what I'm going to do, I'm going to redraw the equity curve, and I'm going to step it or stop it, pause it for a second. and basically go back and review what has happened so far. By looking at the green equity curve, you see that the green equity curve just kind of keeps going up and up no matter what happens down here, because the green equity curve is a representation of all the trades that have closed, and the trades close only with a profit, so that equity curve keeps going up. The red equity curve, which is a representation of all the open deals, well, that kind of zigzags up and down and up and down. If you can see that faint white line in the upper gray section, that is the zero line. So for the most part, the red equity line will be below that below that zero line, simply because these are our open trades. When we are in profit, we immediately take the profit. So as soon as the red line goes above the zero line, guess what? We take that profit, move it from open deals to closed deals, because that's what we do. Now, sometimes the red line goes a little further below the zero line, and that is indicative of a drawdown. Drawdown being that we've got several trades open that are unfortunately not in profit. They are struggling to get into profit. They will get into profit eventually, but the market is not cooperating. Like, for example, right now, I'll open this open deals window. We've got a total of 15 trades open, and I paused it so the market's not running away on us, and we can analyze what's going on. We have a total of 15 trades open, 1, 2, 15. If we added up all the longs, we'd have a total, the summary down here, which is down here. The summary is showing 4.8 mini lots, or 48,000 pounds long, and then 43,000, 4.3 mini lots short, which gives us a net position of 0.5 mini lots long. So the broker will look at this as we only have one trade that is 0.5 mini lots long, but we really have a total of 15 trades. We manage them individually. All the harvesters that are working as a team are managing this entire group of trades, and we're going to be closing them one by one when the proper conditions in the market allow us to do that. So what we'll do is look at this being about 200 pips down, and how you determine your drawdown from the highest from your highest point is by subtracting the profit target, which is right up here as 100 pips, from the total amount needed to close all deals, which is 300. So we need 300 pips of profit to take with the existing trades to take a 100 pip total profit. Now, when that happens, we add the $100 into closed deals, and then we continue doing the next sequence. And once the sequence ends, the next sequence starts automatically, and so on and so forth. And that basically never stops. Now, one thing that I want to point out, that each one of these trades has what we call a trade recovery algorithm attached to it, meaning that if the trade goes south, and it goes south far, then what will happen? The trade recovery will kick in, and we'll try to recover the loss of that trade. So, having said that, let's continue and see how we're going to recover from this drawdown over here. All right, so the market is moving. And if you want to watch this number down here, boom, there it is. Now we made another 100 pip profit. Total, we're 537, almost 538 pips to the plus. Boom, there's another one, 679. So every time we go through a sequence, we add our profit target, whatever we set the profit target to be. Now, it is important not to be greedy. You know, some people ask me, why only 1%? Well, if you can close a 1% trading sequence once a day, that's 20% a month. That's That's pretty good as far as I'm concerned. If you can close it twice a week, that's 8%. 8% per month. Those are just amazing numbers. Now, if you set that profit target too high, you might be waiting for a long time to do that. In fact, you might be going through large drawdowns to get to your profit target. Now, let's
Joseph, real quick, if I can ask a question, because it's specifically related to what you're talking about right now. Dave McGraw has asked, Joseph, please explain how the profit target is adjusted as the account size grows.
Well, that is not adjusted automatically. It is because we do not really want to take it upon ourselves to adjust the profit target in a running strategy. However, what we do recommend and here's another question. People add and subtract money from their account all the time. So we want to be notified that the account has grown to a certain level. Let's just say you start with a $10,000 account. You're at $15,000 now. So you've got a 50% profit. We will adjust this strategy by we'll kind of add another notch, if you will, to it. Increase the size of the trade by the appropriate amount so that it corresponds to your $15,000 trading equity or trading amount of trading capital. So this is not something that it adjusts automatically. We have not installed that function yet. Not that we couldn't, but it's up to the person to tell us, hey, I want to go a little faster because I have more money available.
Excellent, and I know that's been a question asked by a lot of people. So, Dave, thank you for bringing that to our attention. A couple more questions here, Joseph.
If I may, please, if you decide to withdraw or add capital to your account, if you're not familiar 100% with adjusting the sizes of the trades and adjusting all the related functions and algorithms within the strategy, please let us know that you're removing money out of the account or adding money to the account so that we can help you make those adjustments. We actually make those adjustments automatically by just overriding the previous setup.
Excellent.
That's really what happens. We'll just override the previous setup on the next close all deals.
And that is incredibly important, Joseph, because everybody, we've seen what happens if we don't get that email saying.
Right. I mean, we've had some people that open an account with $5,000 account. They have 7 global closes, and then they withdraw $4,000 account out, thinking, hey, this is great. Why do I need to have $5,000 in there? Well, that's not how it works. You need the capital for trade recovery, for additional trades, for the team of the harvester to be able to play. You need the capital. The capital is your tools, just like a carpenter would have a hammer and a screwdriver and whatever else. The capital in your account is your trader's tools, if you will. Okay. So keep that in mind. So by the same token, when your account grows, let us know that you want to kick it up another notch. And that's exactly what we'll do, because we'll just override. We would override. Let's just say that this account grows to $20,000. We'll just override it with a $20,000 strategy out of our library. That's all.
Excellent, excellent. Joseph, one more quick question here. I can't. KH is asking a question. Please explain what the CAD Orphans Only window is underneath the stop price on the dashboard there.
CAD doesn't stand for Canadian dollar. Sorry, it stands for close all deals. But this relates to orphans only. An orphan is a trade or a trade which was created by a harvester that is no longer running, and will usually be shown in a different color. Like for example, this one here. See how this trade is in a different color? That harvester has stopped running, and it created a trade that is no longer being managed by the harvester. It is being managed by an algorithm we call the deal formula. But that harvester that trade doesn't have its parent harvester, so it's we call it an orphan. So because the harvester stopped running for whatever reason, there must have been an algorithm or an event that caused that harvester to be stopped. So bottom line is that we have a function that allows us to close just those trades and those trades only once they reach a certain profit or loss. You specify. Like for example, if I put in here 100 pips and check this off, then the software is going to be looking for all orphans, basically aggregate profit on all orphans and orphans only of 100 pips. And when it reaches that, then guess what? It will close those trades, close those red colored or purple colored or whatever. You set the color of those orphans, right? See in the settings window right now, the orphans color is set at what is it, burgundy, maroon, something like that. I can go set it at bright green or pink or whatever. It doesn't matter. Or not bright green, bright red. That's what I meant. Sorry. So there it is. Right.
Okay.
So now when you'll see it, now when there's an orphan, you'll see it as red. But it's basically an orphan is a trade that is not being right there. Did you see it right there? There it is. So yep. It's a trade whose parent harvester is no longer running. That particular run is not running. So that's what that is. But yeah, similarly, if you apply the same logic to all the other functions over here, this function CAD simple, it applies to all trades that are open regardless of what was closed from that trading sequence. Now then you can specify that you want to close only certain currency pairs. So individual currency pairs will be closed on a certain profit target. And you can also specify short or long trades individually, right? And similarly, you have, just like this is the global deals window, there are 10 additional windows like that where the software, depending on how the harvesters are set up, it assigns different trades to different one of these bins. We call them open deals windows. But if you can imagine a filing cabinet with 10 drawers, and you're filing your different paperwork, if you will, that's the same way the harvesters are creating trades, and those trades are being filed in different bins, different open deals windows, because they are being managed easier that way. And it's just one of the functions that we have in the software, right? So as you can see, we're on the 22nd day of February now. So how long have we been trading here in this time lapse thing? For what, maybe half hour or so? So we've so far closed a total of 4,125 pips of profit, and we are currently in a pretty big drawdown here. Let me stop this for a second. So we've got a 624.7 pips needed to close all deals. That means we're in a 524.7 pip drawdown. Let's look at this. We've got a total of 20 trades open, and what's going on in the market? Well, the market, as you can see, this very end, kind of choppy. If I don't know if you see that. I hope you do. But it's kind of up, down, slightly up and down. And so we've got a choppy market. That's why we've got a lot of shorts, a lot of longs. And as the market develops, we're going to be closing some of the profits and adding to the direction of the market. Let's see how we're going to work out of this drawdown. Let's just keep this open and run it. So there it is. The market moved in one direction. We added some trades. We closed some, and there it was. It obviously, the reason why I want to show you this, because you see it speed it up much faster than if you were just looking at the live trading, because it'd be like watching grass grow, right? You see this happening very quickly as you see how the minutes go by, how the hours go by as almost as fast as seconds, right?
Mm-hmm. Joseph, another quick question. We've got a gentleman here on the questions that would like to know if they can get a copy of the simulator for their own personal use.
Yes, they can if they attend my boot camp.
There you have it, folks. Attend the 5-day cruise excursion, and the simulator will be added to your personal dashboard, so you can actually run it through your own trades. Excellent, Joseph. Thank you.
Yeah, because if you don't attend my boot camp, I do not believe you really know everything there is to know about the software. You might know a few things, but to really know everything and get full benefit and full advantage of the simulator, I for the time being have a rule that people with simulators have attended my boot camp, so they really know what they're doing with it.
Excellent. Joseph, another quick question here. Why, when I check the broker window, there are no trades, but when I check the open deals, there are showing 10 long and still there are 10 short and still long, still going? Why are these trades not reflected in the broker window?
All right, let me pause this. Good. And this is very basic, very basic question, and very basis of our trading strategies. Look at our open deals window, right? There are a total of 28 trades. Now, these 28 trades are comprised of 15.8 mini lots long, and those are the bold ones here. Let me try to open this a little bigger. And if I click on the summary of the shorts, then the short ones, the short trades will be bolded up, highlighted. 7.6 mini lots long. Now, when I open the broker window, the broker is showing only the net. So the difference between the longs and the short, because really that is your net position. So if you subtract 7.6 minus subtract 7.6 from 15.8, what do you get? 8.2, 82,000. So the broker will show, the broker window will show the net, because that really what the broker is concerned about. The broker is not concerned about any of this. Now, if you also remember, there is in the U.S. specifically, there's this crazy rule about not being able to hedge and all that crap, right? So we don't pay any attention to that. We get around it because we manage our trades within our own platform. We trade the way we want, not the way the broker and the establishment wants us to trade, because then we'd be losing money. We trade like they do, not like they want us to trade, right?
We love that about the software, Joseph.
All right. So does that make any sense?
Yes, thank you.
All right. So we only show, the broker will only show the net position, but really we manage each and every one of these trades individually. And what does the management? The management is being done by the harvesters. Each and every one of them is comprised of a trading algorithm, as well as a deal formula, as well as advanced management that is created by an event that causes an action. And that all put together, including trade recovery, zone recovery, that the whole thing makes up our strategy, each individual strategy. That's why we are able to do what we can do, what we're able to do. Now, I do not believe there is a person alive that be able to manage this manually, period. Right? So let's run
Joseph, real quick, yeah, we've got a couple people that have been asking if there's any way we can maybe let this run and speed it up to where we get it actually into June, July, and August of this year to see exactly what's happened within the strategy here.
Well, I cannot advance it. It has to go through the data. But next week, when we do this, we may want to start on a different month. I can queue it up to any date you want.
Let's do that. Let's make note when we do this next week to actually go back to where, where we're in just the most recent months. That's really, I'm getting a lot of requests for that here in my question tab, Joseph. So let's queue that up for next week.
Well, ask a question. What would be the most desired month that you want me to run this on? I don't really care. It doesn't matter. The software will get out of any drawdown. It's just a matter of time, because the market sooner or later will go in the direction of our net position.
It looks like primarily June, July, and August of 2014.
All right, so we can start next time we do this webinar. We'll queue it up to June 1st, 2014. That's no problem.
Excellent, thank you. I'm making note of that, but I'm sure you have.
We just had, if you noticed it, we just had a pretty good drawdown here. When I say good, I don't mean it was good, but big. No drawdown is ever good, but you can make money without a drawdown. See how this red line came down quite a bit under the zero line. But as you can tell, I mean, throughout the whole trading, throughout this whole time, the drawdown is being managed to a certain level. And I can explain on the next webinar why that happens and why you don't need to worry about the drawdown being too large. I only worry about a drawdown if my drawdown is over 50% of my account, then I worry about it. But it generally doesn't really happen in any market because of the way our strategies are set up. There's some safety features and filters that don't allow that many trades to be open. When we have one of these features on a harvester is called a trade interval, and there's a maximum of one trade that can be opened within any 15 pip trade interval, and on most of the accounts that or most of the strategies that we're installing with clients, that trade interval is larger, and that basically determines the aggressiveness of a strategy. If you look at this strategy right here, I have it. This is a very aggressive strategy because the drawdown, I would expect the drawdown to be easily 50% here, and if it is, that's no big deal. It will the software will work its way out of it just because of the way it is set up. But for the most part, a conservative strategy is not going to go under a 30% or over a 30% drawdown. Generally speaking, I would say 99.99% of the time.
Hey, Joseph, one more question real quick. This is actually a fabulous question. Thank you, Mark, for bringing this up. How long was a hybrid 8 tested before you felt that it was comfortable to open up for people to use as a strategy?
Well, I created the hybrid strategy fairly recently in the last 4 or 5 months. I'm not going to lie, but and what caused me to create it was this lousy flat market that I haven't really experienced before with the software. I had seen a flat market similar to this before, but not with the software. So what the crisis caused me to dig deep and put this together. But I had tested it through data going all the way back to beginning of 2012. So from the January 1st of 2012, I had tested the strategy. However, I only came up with it about 5 months ago.
There you have it. And you ran it for how long before we opened it up? What, you ran it for about 4.5 months before we opened it up for everybody?
No. I ran it for only about 2 months, but I had tested it on prior data, just like you see me testing it with the simulator. I tested it on tick data, which would take probably about a week to do. So I tested about 2.5 years of it running on tick data.
Wonderful. All right. Well,
that's the best as it stands right now. That's the best strategy we have, because it has very limited drawdowns in flat market, and when the market runs, it sure adds up the profits pretty good.
Excellent. Well, Joseph.
So we're about 3 months into the trading right now. This particular cycle is 600 pips, 700, as you can see. So boom. Okay, let's pause it right here and let's analyze the closed deals real quick. Going back to the beginning, we had a total of, in the 3 months and 3 days that we traded, we had a total of 1,052 trades for a total of 760 mini lots, and we generated a total of 7,095.8 pips in profits. And basically, we've got the whole history, how it was happening. Every time close all deals happens, right here, we're adding to the account. Now, even though we say there are no losing trades, that is not quite accurate. There are losing trades, but there are no losing trading sequences. Because if a trade goes against us, remember, we've got 20 harvesters, and all 20 harvesters can at one time or another be deployed to go and fix that bad trade, turn it around. And the way they turn it around is by following the market, deploying trade recovery trades, which is like setting out support troops, right? And they turn. If you take this trading sequence, it might be, it might have 20 different trades, and 5 trades might be like 200 pips, in the red, but the entire trading sequence, aggregate-wise, will be in profit every time it closes. So if we add it right there, this particular one is 116.9 pips. I just highlighted the trades from the last close all deals from the last close all deals to including the entire trading sequence of the next close all deals, and that is a total of 28 trades, 18.8 mini lots, total profit 116.9 pips, even though there are losers out there, but aggregate wise it's a profit. So we don't really care how many trades we open or close, as long as we add profits to the account. And that's something that I want people to understand. And the way we trade, we trade based on positions, not based on trades. Most people open a trade and pray that the market goes in their. You're laughing, but that's really the way most people trade. They open a trade, they study the charts, then they decide this is the perfect opportunity, and usually within 5 minutes of them opening a trade, the market goes the other direction. Well, guess what? And praying doesn't help. What helps is a sound mathematical strategy that allows you or enables you to turn each and every trade, no matter how bad the market doesn't cooperate with you, but each and every trade becomes part of a winning trading sequence. And that's the edge that we have. Financial markets attract some of the savviest, if not the savviest people in the world, because they provide the biggest profits that are available to anyone, probably through any means. But having said that, that doesn't come without risk. If there was no risk, everybody would be on Wall Street and everybody would be a millionaire. Becoming a millionaire doesn't happen overnight. Becoming a billionaire certainly doesn't happen over a year's time for 99.99% of the people. And the only risk that you have to deal with, because with the software we've taken most of this risk out, but there is still a relative risk, and the risk in how savvy you can be, and how much of your own knee shaking you can handle when the market doesn't go in the right direction. Having said that, this business, making money in the financial markets, in the capital markets, is not for everyone. If you want to make money like the Wall Street superstars, you have to be savvy and you have to be able to handle risk.
Thank you all so very, very much. God bless and good fortune to everyone. We look forward to seeing you back next week on our Monday and Wednesday night webinar. This webinar tonight is officially over.
Good night, everyone. Thank you, Bobby.
Night, Joseph. Thank you, Joseph.